So ledger, once you prepare a journal entry, you'll pass on to ledger. So now we'll split it according to rules of personal, real and nominal. Goods purchase per cash. What is coming in? Goods, cash is going out. Both are real account. Debit what comes in, credit what goes out. Hello, my dear students. I'm Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I'm going to hand Fundamentals of Business Accounting first semester, Unit 2, Session 3 of Bookkeeping. What is keeping the book in a systematic way? Today, we are going to discuss about the trial balance. So we have to prepare a trial balance. This is for 10 marks question. First, we prepare the journal entry to ledger, ledger to trial balance. So what is trial balance? A trial balance shows the arithmetical accuracy of books of account. So arithmetical accuracy of books of accounts. It should be there are two sides. One is called debit side, one is called the credit side. Debit side should be equal to credit side. What is the debit side contain? What is the credit side contain? Debit side shows assets and expenses. Credit side shows incomes and liability. What is the debit side? Debit side shows assets and expenses. Credit side shows incomes and liability. We all move on to problem now. Capital on the credit side, purchase debit side, plant debit side, furniture debit side, stock debit side, motor car debit side, wages debit side, discount receipt debit, credit side, creditor credit side, bad debt debit side, sales credit side, salary debit side, cash debit side, return out sales return debit side, commission credit side, return outwards credit side, cash debit side, rent debit side, debtor debit side, general expense debit side, discount debit side, carriage debit side, interest received credit side, advertisement debit side. We'll move on one by one. What is the first item? Capital. It's a liability item. It will come on the credit side. Capital 28,000. Now, what is next one? Purchases. Debit side. Purchases 15,000. Plant, that is nothing but machinery, asset, value 15,000. What is the next one? Furniture. The cost of the furniture is 5,000. Debit side, asset. What is the next one? Stock. Debit side 4,000. Motor car. Asset, debit side 8,000. Then wages, debit side, wages paid expenditure, wages 8,200. What next? Wages over discount received. Discount received is income. How much discount received? 300. Discount 300. Discount received 400. What next? Creditors. 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 6,500. 500. Creditors 6,500. Bad debt. Bad debts 400. Then sales. Credit side 40,000. 40,000. Sales 40,000. What next? Sales over. What next? Salaries. Debit side 2,800. What next? Cash. Debit side. Cash debit side 4,000. What next? Return inwards. Sales return. Return inwards. This is sales return 2,000. What next? Commission. Credit side. Commission. How much is there? 600. 600. Commission. What next? Return outwards. Return outwards. This is purchases return 1,000. Then cash. Debit side 600. Rent. Debit side paid 3,500. Debtors. Debit side is an asset. Debit side 5,600. What next? Debtors. General expenses. General expenses 300. Discount 300. Carriage. Carriage expenditure 1,500. Interest received. Interest received interest received 200. Last one, advertisement 500. Advertisement 500. Move on now. So 15,000, 5,000, 4,000, 8,000, 8,200, 400, 1,500 plus 2,800 plus 4,000 plus 2,000 plus 600 plus 3,500 plus 5,600 plus 300 plus 300 plus 500. This will come to 76,700. Come back to credit side. See that? $28,000. $28,000 plus 400 plus 6,500 plus 40,000 plus 600 plus 1,000. This is 200. 76,000. So it will tally for 76,700. So debit side should be equal to credit side. 76,700. We'll move on. Ledger. Ledger means a book where the various accounts are kept. Ledger is a book in which a trader's all transactions are recorded in a classified permanent form is called ledger. So ledger, once you prepare a journal entry, you'll pass on to ledger where each items will be made a separate item for one for salary, one for rent, one for capital, one for cash. Then we'll move on. Feature. It is an analytical record of transaction. It is a secondary record. It is a final entry. It is a principal books of account. Ledger is a permanent storehouse of all the transaction has been put into here. Whatever the journal entry is there, all has been come into ledger. Objectives: to provide an analytical record of business transactions, provide a permanent record of all the business transactions, the final position of each account on any particular date if you want, to help in the preparation of the trial balance. Trial balance is based on the here ledger, to help in preparation of final accounts. Then difference between a journal and the ledger. Journal is a book of first entry, ledger is a book of final entry. It is only original record, not permanent record. It's a permanent record of various transactions, regarded as a rough book, regarded as a fair book. Chronological record of transaction, it is an analytical record of transaction. It is daily record, enter transaction daily. Posting from journal to ledger is done periodically, not daily, periodically, say weekly, fortnightly, fortnightly, once in 15 days, monthly, or quarterly. Now, generalization of transaction. So now we'll split it according to rules of personal, real, and nominal. What's a personal account says? Debit the receiver, credit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses, losses, credit all gains and income according to this base. Commence specific business with a cash of 75. So what is coming in cash? Cash account, debtor to capital account. 1/1/2024. Cash account, debtor. What's amount? 75,000. To who commenced in the books of Mohan? To Mohan's capital. $75,000. Narration, explanation of the entry. Being business commence. First entry. Number 2. Goods purchased for cash. What is coming in? Goods, cash is going out. Both are real account. Debit what comes in, credit what goes out. That is on 3rd June. 3rd January. Goods purchased for cash. Purchases account, debtor. What's your amount? 45,000. To cash account. 45,000. Being goods purchased. This over. 7. Goods sold to Jayakumar. 7th one. 7/1/2024. Goods sold to Jayakumar. Who is the receiver? Jayakumar. So is a personal account, debit the receiver. What's going out? Goods is sale. Jayakumar account, debtor. Jayakumar account, debtor. 15,000. To sales account. 15,000. Being goods sold. On credit. 7th over. 10th one. Paid rent. What's amount? 5,000. Rent account, debtor. How much paid? 5,000. To cash account. 5,000. Being rent paid. What's next one? This over. Draw cash for personal. Anything drawn for personal use is called drawing. 11. Drawings account data. Drawings account data 4,500 to cash account. 4,500 being cash drawn. Cash drawn for personal use. So first entry, cash account data to Mohan's capital account, purchase account data to cash account, J Kumar account data to sales account, rent account data to cash account, drawings account data to cash account. Is over. 12th, sold goods for cash. Goods is going out, cash is coming in. On 12, 10,000. 12,1. Cash account data. What's the value? Goods sold 10,000. To sales account. $10,000 being goods sold. So sold goods for cash is over. Carriage paid. So we are paid for a cartage. How much? 1,000. That is 14,1. This is carriage paid. Carriage account data. How much you paid? Carriage 1,000 to cash account. 1,000 being carriage paid. So this over. 14th over. Then 6. Bought goods from Hari. We have purchased the goods from Hari, 25,000. So what is coming in? Goods is coming. Purchased from whom? Hari. 16. Purchases account data to Hari's account. So it comes to 25,000 being goods purchased. Being goods purchased on credit. 16th over. They received cash from J Kumar, 14,000, allowed him a discount of 1,000. So 14 plus 1, 15,000. From whom you receive? J Kumar. Debit what comes in, credit what goes out. How much cash is coming in? 14,000, discount 1,000. 20th, 21. Cash account data. How much you received? 14,000. Discount account data. We allowed a discount. Discount allowed 1,000. From whom? Jayakumar. To Jayakumar. Totally 15,000 being cash received, and discount, being cash received and discount. So 20th over, paid salary is rupees 6,000. 28, 1, salaries accounted are 6,000 to cash account. 6,000 being salaries paid. Twentieth over, last one, wages paid 3,000. 31, wages account debtor, we paid, cash is going out for sake of wages. How much wages? 3,000. To cash account. Being wages paid. So these are all the journal entries. Cash account ledger. Date. Particulars. Ledger folio. Amount. Date. Particulars. Ledger folio. Amount. This is the date column. Particulars. Ledger folio. Amount. Date. Particulars. Amount. Debit side, credit side, followed by to and by. This is to, this is by. Wherever cash comes, we'll start. What is the first entry? Cash account data to Mohan's capital. We are doing the cash account. So leave the cash. How to write? To Mohan's capital. 1/1/2024 to Mohan's capital account or some amount 75,000. Wherever cash is, you have to look after that. 75,000. Then one entry over. So this over, then purchase account data to cash account. When you purchase goods is or sell, cash is going out. So cash purchases 31 is amount, purchases amount 45,000. 3/1/2024 by purchases. Cash is going out. How much cash is going out? Purchases. How much cash is going out? 45,000. Oh, what next? Purchase over cash. Then J comma to sales won't come. Rent account data, we are paying the rent. Cash is going out. Rent account data to cash account. Drawing account data. Rent account data to cash account. By rent, that is on 10,1. How much rent paid? 5,000. 10,1 by rent account. We paid 5,000. Rent paid. Cash is going out. Rent paid. Drawings account debtor to cash account by drawings. That is on 11th. 11,1 by drawings. How much cash is going out? Drawings 4,500. Come back, next one. Drawing over. 12th, cash account data to say by selling the goods, we are receiving the cash. So cash to sales, 12th one. 12/1/2024. To sales account. How much cash is coming in? 10,000. Sales. Then carry to cash account. Cash is going out because of carriage. How much carriage? 1,000. That is 14,1 by carriage. By carriage. How much? 1,000. What next? Then purchase account, carry over. Purchase account data, her own come. Cash account data, discount account. How much cash received? 14,000 from whom? Jayakumar. So Jayakumar on 20th, 21/2024 to Jayakumar. How much cash received from Jayakumar? Cash 14,000. Don't take the discount. Only cash you have to take. Only cash is important. So how much cash received? This amount you have to take. 20th over. Salary account debtor. We paid for salary. How much money? 6,000 on 28. So that is on 28. By salaries. What's the value? 6,000. On 30th, wages paid. Cash is going out. On 30th, by wages, we paid 3,000. These are all payment. Now, tally the accounts. First, add the figure. 75. This is 30999. 75, 85, 89, 99. 99,000. 99 minus 45,000 minus 5,000 minus 4,500 minus 1,000 minus 6,000 minus 3,000. 34,500. 34,500. 5 plus 5, 10. So last date, 31/1/2024 by balance carried down. 34,500. If you want, 1/2/2024 to balance brought down. This is 34,500. So debit what comes in, credit what goes out, whatever we received, put on the debit side, whatever we paid on, how much balance is left over at the end of the month, 34,500. That is the opening balance for the next month. Hope you understand. We pass the journal entry and you have prepared the cash account. Here we have solved one trial balance. We have passed the journal entry and we have prepared the ledger account of the cash book. Hope you understand. We'll meet in next session with one more journal entry. Till then, goodbye. Meet in the next class.